Hello and welcome. When we think of millionaire investors, our minds often jump to flashy images, private jets, yachts, and complex hedge fund strategies only accessible to the ultra-wealthy. We imagine their portfolios must be filled with exotic investments, secret algorithms, or lucky baits on obscure stocks. But what if I told you that the reality is almost always the opposite? That the portfolios of self-made, long-term millionaires are often stunningly simple, boring, and accessible to anyone. What they own isn't a secret, it's a philosophy. In this video, we're going to pull back the curtain. We look at the common principles and actual holdings that characterize a true wealth-building portfolio, the kind that quietly compounds over decades to create real financial independence. You might be surprised by what you don't find inside. Let's uncover the true blueprint for building wealth. Before we look at a single holding, we need to understand the philosophy. The portfolio is just the physical manifestation of a mindset. This mindset has three unwavering pillars. First is process over prediction. Millionaire investors don't waste time trying to predict the next hot stock or time the market. They know it's a loser's game. Instead, they focus on building a robust, repeatable process, a system that works in all market conditions. Their process is their edge. The second pillar is patience as a superpower. Their most powerful asset isn't a stock tip, it's their time horizon. They think in terms of decades, not days or quarters. This allows them to ignore short-term noise, volatility, and fear. They understand that compounding needs two things: a decent return and an uninterrupted runway of time. They fiercely protect that runway. And the third pillar, fierce cost consciousness. They treat investment fees like a cancer eating away at their compounding engine. Every fraction of a percent saved is a fraction of a percent that compounds for them, not for a Wall Street intermediary. This obsession with low costs is non-negotiable. With this mindset established, let's see what it actually buys. If you could look inside the brokerage and retirement accounts of a typical self-made millionaire who built wealth through consistent investing, you'd likely find a portfolio built around three core, unsexy pillars. First, the uncheckable core, broad market index funds. This is the heart of the portfolio, often comprising 60 to 80% of the total assets. What it is: a low-cost fund that owns the entire US stock market or even the entire global stock market. Why is it there? It provides maximum diversification with minimum cost and effort. It guarantees they will capture the long-term upward trend of global capitalism. They don't need to pick winners, they own every player in the game. This is the ultimate expression of process over prediction. Next, you'll find the strategic satellite, targeted, high-conviction baits. This makes up a small portion, maybe 10 to 20% of the portfolio. This is where personality and knowledge might show, but with extreme discipline. What could it be? It might be a tilt toward a specific factor they believe in, like value or quality. It could be a handful of individual companies they understand deeply and plan to hold for more than 10 years. Or maybe a strategic allocation to real estate through REITs for diversification and income. The crucial rule here is that this satellite portion is never large enough to sink the ship if it's wrong. The core index fund position ensures their financial survival. And the third component is the ballast, high-quality bonds. As they accumulate wealth or approach a goal like retirement, a portion of their portfolio shifts to safety. What is it? Not junk bonds or complex debt instruments, but simple, high-quality intermediate-term treasury or aggregate bond funds. Why is it there? To reduce portfolio volatility, provide income, and offer dry powder to rebalance into stocks during a crash. It's the shock absorber that lets them sleep well at night and stick to their plan. Now, just as telling as what's in the portfolio is what's not in it. This is where many beginners get distracted and go wrong. You will not find frequent trading. Turnover is minimal. They are buyers and holders, not traders. You also won't find leveraged ETFs or complex derivatives. They don't use debt or leverage to amplify returns because it also amplifies losses and the risk of ruin. You won't see them chasing the next big thing. No crypto moonshots, meme stocks, or speculative SPACs form the core of their strategy. If they have any exposure at all, it's with true play money from that small satellite allocation we talked about. You also won't find high-cost, actively managed mutual funds. They've run the math and know that after fees, most active managers fail to beat a simple index fund. And most importantly, you won't find emotional decisions. There is no panic selling after a bad week or FOMO buying during a mania. The portfolio is on autopilot. Often, their entire strategy can be summarized on a single sheet of paper. It might look like this: asset allocation, 70% in a total US stock market fund, 20% in an international stock fund, and 10% in a bond fund. Contribution rule: automatically invest a set amount on the first of every month. Rebalancing rule: check once a year. If any asset class is off by more than 5%, rebalance. That's it. The magic isn't in complexity. It's in the relentless, disciplined execution of a simple plan. So let's quickly recap the Millionaire's wealth-building portfolio. The mindset, process, patience, and low costs. The holdings: a massive core of low-cost index funds, a small satellite of high-conviction ideas, and a ballast of quality bonds for stability. And the absences: no frequent trading, no leverage, no chasing fads, and no emotion. This portfolio isn't designed to be exciting, it's designed to be effective. It's engineered to win the long game by minimizing mistakes, minimizing costs, and maximizing exposure to the productive assets of the world. You don't need a secret formula or a Wall Street connection. You need the discipline to embrace the boring. The greatest fortunes are built not by swinging for home runs, but by consistently getting on base, decade after decade, and letting compounding do the heavy lifting. Your path to becoming a millionaire investor starts not with picking a stock, but with adopting this mindset and building this simple, powerful structure. Thank you so much for watching. If you found this helpful, be sure to like and subscribe for more content on building real, long-term wealth.